This is Chris Whalen, CPA, and welcome to the Street Level Business Podcast. My CPA firm specializes in business and individual income taxes. If you would rather read this podcast, there is a text version of it. There is a link to that text version above this video if you're watching on my blog page, or in the description if you're watching on a video sharing platform. If you find this podcast informative, please take a moment and share it with your networks and contacts. Today's topic is, before the lockdown, did you commute to another state to work, but now are working from home? Most times when you work in a different state from the one you live in, you pay income taxes to that state as a non-resident. Also, during normal times, even if you work from home all year and never travel to your out-of-state office, your income is still taxable in that non-resident state if your company has a physical office you could have worked in. An important note here, though. There are some states that have reciprocity agreements, such as New Jersey and Pennsylvania. This means that a New Jersey resident working in Pennsylvania does not have to pay non-resident tax to Pennsylvania and vice versa. If this is your situation, then this memo does not apply to you, but please check with your tax preparer to make sure you understand your specific situation. The rest of this memo assumes that you do have to pay non-resident state taxes when you are working out of state. We also calculate your home state income taxes on your income earned out of state. But wait, you might say, doesn't that mean I'm paying taxes twice on the same income? That's a great question, but the answer is no, because when we do your taxes at the end of the year, we take a credit for taxes you paid to the non-resident state on your resident state income tax return. This avoids the double taxation worry. During the lockdown, many of us are working from home and are no longer commuting out of state to work. Why is this important? In the majority of cases, because you have been told to work from home and that you can't work at your out-of-state office location, you no longer need to pay income taxes to that non-resident state. But many of you in this situation are still having your non-resident state tax withheld when you really should be having your resident state tax withheld. If you look at your screen, I have an example here of a New Jersey resident who traditionally worked in New York City as a non-resident. Let's go over it together. The first section is before the lockdowns. Your wages are taxable in New York even though you live in New Jersey. We can see that New York taxes are being withheld from your paycheck. I made it a simple break-even of $10,000 total New York taxes and $10,000 withheld, so there is no overpayment or balance due on the tax return. We see then that there is a New Jersey tax calculated of $7,500, but we get a credit for the taxes paid to New York. As that New York tax is greater than the New Jersey tax, it completely wipes out the New Jersey tax, so there is no overpayment or balance due on the tax return. Note that we only get that resident tax credit up to the amount of the resident tax in New Jersey. Now let's take a look at the situation post-lockdown with people working from home in their home state. We no longer have taxable wages in New York, so taxes are zero, but New York taxes are still being withheld. This gives us that overpayment or refund of $10,000. Our wages are taxable in New Jersey, our resident state, but we don't have any tax credits to take from New York, so we have a large balance due of New Jersey tax, or $7,500. This might trouble some of you, but the most important lines to look at are total taxes paid. At the end of the day, you are only paying New Jersey taxes, which are lower than New York on average. So if you were a full year working at home, your total taxes would be $2,500 lower, or $10,000 less $7,500. Again, many of you may still be having New York taxes withheld, and your tax preparer may prepare your returns as they have in the past, showing all of the wages as taxable in New York and taking that credit on your New Jersey return. But now you can see you might be paying much more tax than you have to. My firm is perfectly suited to help you allocate your wages between the states correctly. Some of you will have a partial year of this situation. Let's say you commuted to work in New York normally at the start of the year and then started working from home on April 1st. You would have to allocate 3/4 of the year to New Jersey wages and remove them from your New York tax calculation. It sounds like this person needs a good CPA to help them. I know a good one. Of course, we are here to make sense of all this and to make sure you pay as little tax as legally possible. Today, no one can afford to pay any more in tax than they have to. Make sure you minimize your taxes this tax season. This brings us to the end of this edition of the Street Level Business Podcast. Questions? Concerns? Call me on 732-673-0510. Thanks for listening. I hope you found this podcast informative. If you want to become a subscriber to my business and tax podcasts and memos, please send an email to me at chriswhalencpa@gmail.com and I will add you. Remember, the moment you have a business or tax question is the moment you should be calling me. Have a great day.